Right. Hello, everyone, and thank you so much for joining. This is the Life Design Analysis July 2021 webinar. I, as usual, am your host, Charlie Conrad. I'm the CTO and founder of Life Design Analysis. Now, this month we wanted to go back to basics a little bit and really rely on some of those core fundamentals of life design analysis, how visuals help accentuate the report, and really how they help position options for clients. So we want to focus on this concept of asymmetrical dominance. So sometimes it's referred to as the decoy effect. And it really gives customers the right number of choices to help satisfy, either different funding options or different solutions that help them pick the right product. But by using something to compare them, again, they are more easily able to reach their decision because there's less opportunity cost, they think, in picking the wrong one. So really showing the right kind of options that solve your client's needs, but positioning it in a way that makes a certain option the obvious choice. And a lot of times that's comparing things like term to permanent. We see the obvious choice because of the renewals, and sort of those renewals that increase over time really provide sort of that they asymmetrically dominate in price what we thought was originally expensive our whole life. So we're going to dive into this concept and show a couple different ways that you can use this. Just a few housekeeping and updates before we get started. This webinar is going to be recorded, so if you do want to find a recording of this to watch any pieces of the concepts after the fact, you can navigate to our site, lifedesignanalysis.com. You'll see the blog section where all of our past webinars are recorded and hosted, so it's the same place that you went to register. I'll also point out that if you wanted to do any of these concepts, again, navigate to our main website, lifedesignanalysis.com. You can always sign up free. We have a 30-day free trial. There's no credit card on sign up, so that you do get to try it out for 30 days. Try one of these cases that you're working on. Hopefully you have success and it pays for the membership. Generally, we have great feedback from our advisors using our system that we not only save them time, we help increase the value of their practice and make them more revenue. And we also help automate that compliance backup. So all of these cases are saved. I do want to point out as well, if you are a LifeGuide subscriber, when you are signing up, although the first 30 days is free, if you choose to go on with any of our subscriptions, we do have a LifeGuide discount that's going to give you 50% off up to the cost of that LifeGuide subscription. So again, subscription available to you. If you're with one of the major MGAs in Canada, we also offer discounts for that as well. So I'm going to go ahead and log in, and we can get started on creating these concepts. I do also want to point out, though, on our blog, we do have a blog around this decoy effect. So if you wanted to do some reading on this kind of concept of what asymmetrical dominance is and how it's used, there are some different options, and they do actually cover some of these case studies in there. Now, you can see when I read sort of the definition of an asymmetrical dominantly option, you can see it's an option is asymmetrically dominated when it's inferior in all respects to one option, but in comparison to the other options, it's inferior in some respects and superior in other options. So insurance, we're usually talking about something could be, inferior in price in terms of it's more expensive, but superior in other things in terms of like cash value. And so, communicating that value is all how we position these different products. Now, I think the best way to sort of describe the decoy effect is this sort of graphic here, where we can see, if we give customers a couple options and we say, look, you can buy term or whole life. Again, it's sort of, this one's cheap, this one's expensive. All of a sudden, if we design a couple options where we have the same sort of thing, 10, 30, and all of a sudden a 50 option or a platinum option, all of a sudden this one doesn't seem as unreasonable. And a lot of times with insurance, people think that term insurance, because it's so affordable, is a really good deal, and certainly, obviously, it is for the first period. But if we need insurance for life, again, we want to position these products to show how over time that, maybe that term option really becomes the expensive option, and all of a sudden this, this middle option, the whole life that we thought was, super expensive, once we see the value in it, we think, it's a lot more reasonable when we compare it to the different options out there. And again, we can always throw in things like different ULs and things like that. Now, again, this is something that no matter what market you're in, it doesn't have to be whole life, it doesn't have to be high net worth or mass affluent. It can be even as simple as things like term. So again, when we're presenting term options to a client, it might be something like term 10 versus term 20 versus term 30 versus saying something like just term 10 versus term 30. So there's lots of different ways that we can sort of position products, and obviously with life insurance there's a lot of different ways we can solve them. And so today I'm going to illustrate a couple of those main cases, and we're going to show regardless of what market you're in or what sort of products you deal with, there are lots of different ways that we can give our clients options that are going to help them see, sort of the best product for their needs and identify that, something is a little bit more reasonable based on its other options. So I'm going to go ahead and log into my account. We'll set up the first case and just start off very simply. So again, as anything in LDA, when we want to create a new case, all we have to do is hit the plus new case button. Either select an existing client, so if you've imported your block of business, you're going to find that all of your clients are in there with all of their kind of contact details. All you have to do is start typing their name, and you can see Phil Mickelson, which is my kind of test client that I use, can be selected from the list. Alternately, we could always create a new client, and we could call this Mr. and I'll just call it Decoy. Again, I'll make Mr. Decoy a little bit younger, so I'll just say Mr. Decoy was born July 1st, 1988, and given that he is a Mr., I'll make him male. Now, again, all of this additional detail is excellent for building your client record, so I'd always encourage you to fill in all of, kind of the relevant fields here, things like email, phone number, all of that kind of information. Throw in their address. Again, we have a great little autofill here, so I can say, I'll put in our business address. 30 Wellington, and you'll see it's automatically going to fill out here. So I'll go ahead and create this new contact, and any future case, again, that contact, Mr. Decoy, is always going to be there, and I can build on this client record. So I'm going to hit continue, and we can start building our first example. So as I said, when we're presenting sort of the decoy effect, we want to have, even if we think a term 20 is right for Mr. Decoy, we want to give our client options. They obviously have the option to buy a term 10. So, obviously depending on the situation of why they're buying insurance, one of the popular ones is obviously some mortgage protection, or just, there's general interest in life insurance right now. So people are top of mind. They know they have an insurance need, and they want solutions to solve it. But, again, studies show repeatedly that consumers are confused by their insurance options. They don't want us to simply, say this is, they definitely want a recommendation, but they don't only want one option to pick from. Obviously, there's cash flow sensitivities with different clients, and there's a perceived value in different products. There's lots of information out there on the different products they can go with. So in this one, we're going to pretend that we have $1 million need here. I'm not going to go ahead and do a needs analysis. We'll just skip right to entering an insurance benefit for $1 million here. And I want to go through and actually add 3 products that are going to solve Mr. Decoy's mortgage issue here, where he needs insurance to cover a mortgage, or something maybe for 25 to 30 years. So certainly we do want to show this prospect some term, but we want to show different options within that term. Now, what I'm going to do is actually run a recipe to expedite this. So recipes, I can run a combination of products all at once. So again, for someone with a mortgage, I'm going to be looking at T10 versus T20 versus T25, or maybe a T10 versus T20 versus T30. Now, it's important to note there's lots of different ways that you could kind of accomplish this. So you could even illustrate things like a term 10 exchange to term 20 versus a term 20 versus a term 30. Again, you can be very granular, either using our layered plans or individually selecting these plans. For my sake, I'm just going to go with the best T10, 20, and 30 for $1 million for a 41-year-old male here. So you can see, basically, I'm running my recipe. It's just going out of my preferred companies. You can always select a specific company or go with just the top results off of the kind of the set that you've marked in the account settings as preferred. And then simply, once you've kind of adjusted these settings to fit your clients, just click the Add Recipe button. Basically, what we're doing is going out, and through that kind of partnership we have with LifeGuide, we're using their service to basically return us what are going to be the sort of the top results within that criteria. And again, as I say, we could use all, kind of the different products, or all from a single company if we wanted, or select from our carrier list. Now you can see here, again, our report's got T10, T20, and T30. And the whole idea is that, yes, a T10 would be more than fine to sell to this client because it's going to solve that immediate protection need for 10 years. It's going to be an affordable option. But it may not be the best given their, 25 to 30 year mortgage need, and the fact that, as my stepfather would always say, term is like a diaper, and at some point we're going to need to change it. This would just sort of give them options to delay that, and of course there's going to be certain cost sensitivity. So obviously when we survey our T10 here at $625 per year, is going to seem less expensive than our $1,000 for term 20, and that's going to seem expensive compared to our $2,127. But remembering from our blog about the decoy effect that we're using these to sort of asymmetrically dominate and give options to our clients. Now, I'm just going to go down here into my report and basically cull some of these different report metrics. So in this case, I'm doing something very simple. I don't really want my IRRs. I don't need any credit to the CDA. I just sort of want the basics and maybe something like a cost per thousand of insurance, as well as my summary. I'll take out IRR of cash value because we don't have any. This would be a great time, again, to add any sort of concept or report note. If you have something like a new buyer, one of the kind of the concept notes that we might put in there would just be something like types of life insurance. So, if this is someone new to the market, we think maybe they're leaning towards term 10 or just getting in with the bare minimum, we can give them sort of a report note that describes the different types of options out there. But essentially what we want to do is we want to give 3 different options to solve this insurance need, and we're going to generate the report to show how to leverage sort of the positioning of these different options to highlight an obvious choice for them. Okay, so we've got our report prepared here. And again, remember all of these kind of branding, like the colors in the report, the logo on the report, are all driven out of the account settings. So if you're new and watching this for the first time, remember you can customize these for your exact brand standards so that when you present them to their clients, they look very professional and prepared. Again, include everything from your disclaimers to even things like the report note. So this is that types of life insurance note that I added in there. Again, just gives kind of an overview on the, the different types of products out there for someone who's relatively new to insurance and maybe is confused on the different options out there. Now, as I said, this is kind of what gives us the breakdown of all the different products. So this is just the premium schedule, and again, this is going to help back up kind of the charts and graphics. And again, as I said, we're sort of giving the 3 options here. We've got our low option, our medium option, and our high option. But because of the characteristics of things like the renewals, what we really want to focus on are some of these visuals and really showing that, there's a very small difference in premium in the early years compared to how the costs change over time. So again, you might use things like those call-out notes to call out things like a term renewal, and you can see by using visuals, we really get a good scale of how that product's change. So one of the things that makes this asymmetrical dominance, or sort of as they call it, the decoy effect, work is that we're able to take all of that kind of quoting information and premiums over time and really give a nice simple visual that no matter what your financial literacy is, that you can actually understand what's happening here to price. That price is shooting up, and that price is, in this particular case, is actually increasing on an annual basis here to gradually increase. And a lot of times, again, we're able to really simply condense this information into a conversation about if this product that we're purchasing is solving your need. Yeah, certainly the term 10 is going to do that, but at the end of your mortgage, or when you want your insurance to end, in this case, if it's purely for a liability like a mortgage and some family protection, some of those needs may end 20, 30 years down the road and reduce that need for insurance. So this is a great way to, again, position products that may have seemed affordable, like that term 10 here in yellow. And we can actually show that over time they become a more expensive option. And really the idea here is that, yes, these products dominate them in some ways, so in terms of initial premium, certainly. However, when we look at sort of the total picture over time, we really see that again, that product that we perceive the T30 as being very expensive from the beginning actually becomes a more affordable option over time. And again, really helps them solve that need. So that's a great way to use sort of that good, better, best. Again, we have sort of a bronze, silver, and a gold option. Now, really doesn't matter which one of these our clients pick. Again, it's not necessarily about do we need insurance, it's about what's the right insurance product to solve our needs. And this helps refine it down to 3 very simple kind of options. Now, this is where LDA is highly effective because, as I mentioned, these visuals are very quickly interpreted by the brain. One of the things I like to show that kind of go back to the core concept of why LDA was so effective with consumers is because of these visuals and why visuals work. And this is sort of a graphic I really like that, it really emphasizes how fast we process visuals. So, I used to give this presentation where I would show this visual and I'd say, which communicates the message better? And I'd say there's a reason we use traffic signs to communicate. So, all we need to see is one traffic sign driving 120 down the 401 to recognize that, yes, there are rocks falling or the potential of it. Whereas if we have to communicate this with simply text or numbers, again, it takes us a lot longer. So while you're traveling down the road, there's a chance that one or more rocks of varying size may fall from the slope. So it's a lot faster to absorb the information in a visual. And when we come back to our life insurance report here for Mr. Decoy, it's the same sort of thing. Yes, certainly we could break these all down into text and numbers, but it's very hard to present that value over time. So, when we do look at things like the traditional illustration, you can see here, I've got a couple illustrations. It becomes very hard to leverage the concept and really, illustrate the differences in these products. Obviously we see the renewals here and we see they get larger, but it's really hard to put them in context. So again, when I'm trying to leverage the concept of comparison and say, hey, you have this option for a T10, you have the option for a T20, and you have the option for this T30. But again, we've got 3 different illustrations, even from the same company here, but it's very, very difficult for me to get a sense of, what the best product for me and leverage this, sort of good, better, best concept, or this asymmetrical dominance. And that's why, again, we take all of this sort of information and we distill it into these visual reports that really help compare and contrast, so that you as the advisor can take the mouse and go over and say, at the end of the mortgage in 25 years or at the end of the mortgage in 30 years, what line would you prefer to be? And again, it makes it very, very easy for them to see that coverage remains the same, but costs are very different of these different products, and helps them kind of gain that understanding of it. Again, you can use other charts as well, like cost per thousand. So this is going to be calculated as an average of that unit cost of every $1,000 of insurance over the time period that you've specified in the report. So obviously, as we push this report out and our term 30s renew, we're going to see a higher cost per thousand. But again, I always think about this as, sort of distilling it down into that per unit cost. Of course, at the end, we're going to show basically where those numbers came from and the summary of, sort of the costs. And again, this is really that, something we thought that was affordable in the beginning, at the end of the day, based around our time frame, doesn't look that attractive. And basically the superior features, if we go back to the beginning of that asymmetrical dominance, is that, yes, this one was more expensive initially, but over the long term provides more value and provides a better coverage for our time frame. So this is a great opportunity to present sort of these options in a very visually friendly way. And as I say, again, by using these visuals, we're a lot more effective. And there's some really great sort of information about why visuals work. Again, they're more engaging, so when something's colorful and interactive, people are about 80% more willing to absorb and read the information. That's so important to make your point around these different products, because when you're over Zoom trying to present 3 different illustrations and say you have these 3 different options, we really need to make it easy and distill it down to something that is visual, it's interactive, and it's engaging for our clients, because it increases that willingness for them to actually pay attention and absorb that information. There's some more things. Again, it's more accessible. The understanding level. So this one, they found that when they added text alone onto sort of prescription labels, people were only 70% effective at understanding it, whereas as soon as we add pictures and charts and symbols and things like that, the understanding rate goes up to about 95%. So again, when we're trying to communicate something as confusing as insurance, which about like 88% of people, or I always kind of think about 9 out of 10 say they're confused by their insurance options, adding visuals can really up that comprehension. Again, people follow directions with text and illustrations do 323% better than without. So again, when we make our recommendation and we back it up with those numbers, again, we're going to be a lot more persuasive. So again, we're going to persuade our audience by the use of visual presentations. We're going to be a lot more effective when we use these visuals and these kind of added graphics. Again, we want our clients to remember what those recommendations were, and we really want to make an impact. So you can see, people remember 10% of what they hear. So when we tell them that, maybe term 20 or term 30 is the best option, 20% of what they read. So they read an article on insurance and why they may want to consider permanent, but they again, they recall 80% of what they see and do. So again, if we can actually, visually get them into this case, and we can actually share a shared link where they can engage in these videos, they're going to be a lot more effective at remembering what option they thought was best for them. Because they're educated around all those price, they're going to see that. So I think this is a great graphic in just sort of explaining why visuals work and how they can help us leverage this. Because again, especially over Zoom, advisors out there non-face-to-face, it becomes very difficult to sort of present this information. And these reports, again, are going to really make it easy for you to leverage this sort of concept of giving clients options, but having them automatically kind of isolate the right product for their needs. So this is a very simple example of term. I want to dive into a few other ways that you can use this. Certainly, doing something for term is great, but let's move on to maybe a different example of this in the form of a term conversion. So maybe they already have a product, and again, that they've gone with the term 10. We want to show them their conversion options, and again, really highlight the differences in those products using that same sort of effectiveness. So let's set up a new case. Again, I'm going to say plus new case. This is our little handy short bar, and in this case, I'm just going to select Mr. Decoy. So there's Mr. Decoy there. I'm going to select him, and again, I don't have to create a new client every time that I do some work for this client. Again, we can keep building off of this case here. Just while I talk about the next example of a term conversion, I'll just show you really quickly that as you kind of build out cases and different examples and client work, everything is tied to that client, as I mentioned. So if I pop to Mr. Decoy here, we can see kind of the basic information that we entered in step 1. We could always edit that client to add more of that information after the fact, but you can see here all of our casework is going to be documented. So this is the kind of the first case that we just created, and again, we're going to create this second case. You can see we've started it, but we really haven't done anything with it. Now, because this is a term conversion, I do need an existing policy for this client. I can either enter it in the case and save it, or I can just simply say new policy here and enter the details of it. The other option is, of course, import your policies from the carriers, and again, we'll populate across all carriers, all of your in-force business, so that you can simply type a policy in there. Now, I'll just give this one just really quickly here. I'll say 1234 is our policy number. I'll just call this term 10. I'm just going to give this a few details here. I'll give this $1 million insurance benefit. And we get an opportunity to enter these initial premiums. So as I said, you can do this either in the case by adding a term plan manually. You can import it to get a couple of those renewals. Generally speaking, though, carriers generate these renewals at the time. So again, it's good to augment these and add to them. We'll just say that this term plan was $1,300 the first year, goes up to $4,500 on its first renewal. So that would be after that first 10 years, it will renew at that price. It's going to go up to $13,435 on its next renewal. Then it's going to jump to $25,000 on the next renewal, and you can see it's always going to give you the option for another renewal, and that's because different clients, depending on your age, you will have more or less renewals. So again, if this client is 40, this would be 40 to 50, 50 to 60, 60 to 70, 70 to 80. Then it's going to go 80 to 90, and depending on if the product is renewable to particular age, right? So some of these are starting to be renewable to 100. That kind of client will have more or less renewals. So let's just say 100,000 as our last renewal, just to speed this up. I'm going to say this one's renewable till 85, convertible till 75. Again, you can add things like the policy owner, status, beneficiary, things like that. For brevity, I'm just going to give this one an issue date and say that this was bought maybe in 2016 here. So I'll just say in the 2016. Again, expiration date, renewal date. A lot of that comes from the imports. If you don't enter that, we can often figure it out just based on the renewable age and the client age, as well as what the issue date is versus the type of policy. And again, all we're going to do here is save that as a policy to add it to this client's in-force policy status. So you can see, yes, we've got some cases. Now we've actually entered an in-force policy. Now, as I said, anything that's entered in here is going to be automatically added into that policy automation. So essentially, at certain milestones during this policy, we'll notify you as it comes up to critical issue date, as it gets closer to its renewal. And we can actually automate out cases based on your specifications as well. But for this case, I'm just going to enter it in there. We're going to go back to that one we started to do a term conversion. And because I've entered now an in-force policy on that client file, you'll notice that now we can actually leverage any of that information that we've pulled in. So in this case, I'm just going to say we want to bring in that in-force policy, 1, 2, 3, 4. Again, we're going to tell it what it is. So in this case, we're just going to confirm that it's a T10, and we're going to hit save. So we've got our Term 10 with its issue date in there. So again, it's going to be effective in showing what those premiums are, given the fact that some of the time has passed and we don't necessarily have 10 full years left on this policy. And then what we want to do is we want to actually compare it to some other options. So again, in this case, the Term 10 seems affordable, but is actually going to asymmetrically dominate these permanent plans we're going to add because all of a sudden, over time, when we see those renewals come through, we're going to notice that price is actually in favor of the other plans, and they're going to offer ideally some value. So in this case, to set up the term conversion, I'm just going to add a min-funded UL. So this is going to be kind of our silver middle of the line option. And I'll throw in again that it's $1 million insurance benefit. You could always, again, layers work really phenomenally for this as well. So you don't necessarily have to do a full $1 million because I recognize that is quite a large jump in premium. And although the visual is still going to look good because over time, the term premium is going to increase so much. You can layer, though, if you want to make it more palatable, because I recognize that cash flow options, for clients are a real thing. But the other thing is you can still leverage this even within layered options, right? So again, your gold option might be, a full conversion where your asymmetrically dominated, your decoy one is actually that layered solution that you think is valuable. So you can say, look, if you had the cash flow, certainly you could pour it all into this, but I can layer a little bit of term and UL together to make a more palatable option. So there's lots of different ways that you can kind of leverage asymmetrical dominance to give your clients options while still solving their needs and still respecting those kind of cash flow issues. The next thing I'm going to do is just bring in a whole life plan here. So I'm just going to use the search rates in this instance. Again, we can do life pay. I always find 20 to pay often looks really good because it's going to end the cost of the plan. Guaranteed 20 pay often looks good because we're not paying premiums after that. So even though it may be a little bit more expensive in the kind of the initial years, it looks really nice in the report because we're not paying premiums after that. In this case, it's going to be nice with a 40-year-old client, as they're thinking of drawing down cash and things like that and reducing expenses. It's going to be a nice option there. So I'll just select this Desjardins plan. So again, I've got sort of 3 different options. Again, last time we did a term example. This time we're using some permanent and some term. But again, the same sort of impact is going to be there. So I've got term, UL, and a whole life here. Again, I can use things like those report notes. I can go down into my products and I can change certain components there. So again, I'm going to take out things just like my mission statement. I'm going to take out some of these IRRs. I will actually leave IRR of insurance benefit too as another example in there. Take out things like the CDA and these. And basically, again, when I've got my kind of report component set, all I do is generate the report. So again, this is a classic term conversion report. One of the other things too is you may actually add a title. Back on that last screen, there is a title screen, so you can also add something like term conversion there as a title. Again, we've got our disclaimer and the same sort of effect here. So we've got our term 10, we've got our UL, and we've got our whole life here. You can see, seemingly, we're paying a very affordable premium, $1,300 per year. We're saying, we do have a problem because of the issue date. We're 5 years away from this thing jumping to $4,000. Then it's going to jump. And obviously, again, we can rewrite this and we can keep doing those kind of comparisons, but we want to, kind of exercise conversion or permanent options. So again, you can see here I've got term 10, UL here, middle of the road, and I've got a whole life product that's a little bit more expensive, but again, recognizing that it's only going to be paid for 20 years. So same sort of thing, again, something that's traditionally, very difficult to explain, in-force illustration and 2 different quotes out there becomes very, very simple to really show, yes, this one is a more expensive option, but again, it's different than the other options because it does actually end after 20 years of paying it. So again, given our client's age near is 41 or age 41, we're going to see that these plans drop off, whereas these other plans continue for life. Again, conversion option expires, plan expires altogether at age 85 here. So again, great visual kind of, showing that asymmetrical dominance, showing the differences in these plans and how, even though something that, is slightly different, like this one's the highest cost, it does have benefits in the terms that we stop paying it. Now again, when we look at the overall comparison of our sum of premiums and we really frame it on time, you can see the report's pushed out this till age 100 here, or age 99 where I've set it. But again, what we're seeing is our affordable option, our Term 10, our existing product, we can see is more expensive because of those renewals versus, say, our whole life option, which, yes, at 20 years is obviously the most expensive, but we stop paying it. So we can see that as time goes on, it actually becomes an affordable option. And the nice thing here is we've got kind of this middle of the road option. So, steady, level for life UL cost, but no real values to speak of in this plan. And this is where I think the kind of the asymmetrical dominance or the decoy effect really kind of shows us the weaknesses of the other plans to highlight the option that is the most attractive here. So again, yes, it has the highest initial price, but as we see, our long-term costs are lower and we have some value for it. So again, the other aspect of that, where it's asymmetrically dominating them, is that it's the plan that has cash value. So it actually offers them some value for, the initial investment here. And again, I like to look out, one of the nice things about LDA is we take it out to this break-even point here. So consumers really like this, this idea of when do the costs all sort of equalize. And we can see there is this convergence right here from, age 71 to 75. And I think most clients would agree that's well before their life expectancy, and see kind of the long-term value of that. Now, what I like here is if you can notice that if I just leave my mouse in this place and just simply scroll down, you can see I'm at age 77 or year 36, where we can say, look, even if we recognize that this product here, this term, is not the most ideal, and we break it down to even these two options, we can really easily say, look, at year 35, that's where we're going to see the break-even point. And as we sort of scroll down, again, we notice that our mouse is going to be in the exact same spot right over year 35 there. And so immediately we can see that, even though the costs were the same at that time frame, we actually have cash value in there. So we have $548,000 of guaranteed cash value versus the $315,000 of guaranteed deposits that we put in. And that's really going to be the sweetener over the other two options. So yes, it was more expensive, but now it's beaten, sort of the other two plans in two other regards where it is superior, going back to kind of the original idea of asymmetrical dominance or that decoy effect. Now, certainly all of these three products, fulfill the need at the time. The term may not always fulfill that need. So we do have, some differences in these plans that we can really highlight the values to our clients. Again, looking at coverage amount, when we think about, sort of that aspect of it, we see that, at 85 here, that term plan, there's no longer an insurance benefit. So, also in respects to when something renews is differences that we're going to see that are going to be dominated or asymmetrically dominated by the other coverages. So again, nice little presentation summary here. The other thing too that I find helps when doing sort of a presentation like this, I'll just zoom back out a little bit here, is that we don't necessarily even have to focus on client names or anything like that. So, while I have BMO and Desjardins in here, this could simply be something like going in here and hitting the edit plan and saying that, Term 10 is good. We want our clients to feel like the coverage that they have, obviously we sold it to them in the first place potentially, that it was effective and served its purpose because it does have a place. But we're going to say that this is the bronze on the podium here. And I'll just go ahead and update the name of this product. So again, we can be a little bit more agnostic in how we present this as well to really relate to the client. Perfect, so we've got our bronze in there. We're going to call the UL here the silver. So I'll go in and do the same thing, hit the edit plan, take out the name, and just up in the name here, I can always update these. So I'm going to say this is the silver option. You may want to add a description of what it is just so it shows up on that page. But I mean, in terms of simplifying it for your client, sometimes it takes away all kind of the jargon of what a UL is or what a whole life is, paid up additions, dividends, that kind of thing, and just simply makes it into something more palatable that they're very familiar with, even on a regular subscription base, right? With products they deal with, there's a gold level membership, platinum membership, same thing with credit cards. So again, again, it brings it into that realm of something that they can relate to. And again, I'm just going to go on my last option here, and I'm just going to say gold. So again, something that they could all relate to. One of the other things too is if you know your client is a particular fan of something. So one of the examples I give is cars. If we know our client is really into kind of sports cars or something like that, I mean, you could easily kind of modify this for them. So it could be your Ford, or like your Chevy Corvette, your Porsche, your Ferrari. Again, really relating it back to them into something that they can understand. But again, same sort of way I can set up this case, being completely agnostic about product itself, but simply highlighting it in the sense that, there are different options. What you have is bronze, and let's compare that to gold and silver. And I'll just show really quickly here if I generate this report. We can get this great comparison that, again, we're not talking necessarily product, we're just talking options here. Bronze, silver, gold, and you can see all across the report, those premiums and everything are going to be reflected, but it simplifies our life a little bit in talking about the different options and really frames it for our client in terms of, different ways to solve a problem. No certain solution is prescribed. Some are just obviously better than others at solving the need and have particular values for it. So that's a great way, again, total cash value of our gold plan can be done there. So one other thing too, if we go back to the case, this is where, again, on the case title, you might add something like term conversion. So again, you can add a nice little title tag there. When you generate the report, that's going to show up on the main page. So you'll see that title there. You can add anything. You can really add any different language in there as well. So if you have a client, and you want to add something custom for them, by all means, you can put that in there. So that's another example of a report. Now I want to show you another way to do this as well. As I said, it can be done with really any sort of product or solution. So I'm going to dive right in here, and I'll make a new case for Mr. Decoy here. So again, Mr. Decoy. There he is. Select him and hit continue. And in this example, what I want to do is I want to bring in whole life options, and a lot of the times, you may have done different reports to get your client to the point of seeing, term versus whole life, and then it comes down to a matter of how much do we want to put in this. So, it's a lot of cases at the upper end or the high net worth market. It's simply a matter of not necessarily deciding if we want whole life, but how much we want to put into this investment vehicle or this alternate asset class, if you will. So what I'm going to do in this option is I'm going to go with whole life from a particular carrier, and I actually had Equitable Life up there, so I'm going to add that one in there. And I'm going to repeat the process 3 times. So again, I'm just going to go through, add it again, and one last time, I will add this again and say Equitable Life, whole life. This can be done obviously with any carrier. And just like the last example, if we wanted to do a gold, silver, bronze, we could definitely do that. We could also do, kind of any other example. Might even just rename these for the deposits, 50,000, 75,000, 100,000. So let's go ahead and design our plan and bring it in here for Mr. Decoy and show another way we could use asymmetrical dominance even within the same product line. Essentially, the funding level is creating that, the Goldie-lox effect, the 3 bears, a little too cold, a little too hot, just right. So we're going to find that sweet spot for our client by bringing in the different product types. So I'm going to jump back over into my Illustrator here. We're on terms. Let me get rid of this one here. No thank you. And I'm just going to use the Equimax participating whole life here. Again, as I said, we've got a 41-year-old male, $1 million, and we're going to set up on a 20 pay here. And basically what I'm going to do is I'm going to design the first one as my bronze option. And in this case, I'm actually going to use my bronze with a layer. So I'm going to take 500,000 of the base, and then what I'm going to do is I'm going to add a 20-year term rider for the other 500,000. Again, I want to have this drop off. Part of my impact is I want this one to be the kind of the affordable plan. So what I'm going to do here is just say that 41, 51, 61 is when I want that to end at. And you can see I've got, sort of a $14,000 premium, and this is sort of a layered solution. So all I'm going to do is export it here, export that to Excel, and I'm going to take this whole spreadsheet here and consume it in LDA. Easy as either selecting everything and doing a copy, coming back to LDA and doing a paste, and then just upload. Other option is you can save the whole spreadsheet file and then just select it from the file browser or drag and drop it. No option is better than the other, just depends on if you're going to keep that file. This one, I'm going to go right just to keep organized. I'm going to edit this, and I'm just going to say, I'll just call this bronze. Again, I'll go ahead and save that. Now while that's saving, I'm just going to come back. I can get rid of my spreadsheet. I don't need the information anymore, and I can deliver my next kind of plan, which again, one of the things we can do is simply just work with our deposit, so we can solve for deposit amount. The other thing is we can work with product type too. So if we have time, I'll show both different options, but in this case, we could also do something like an enhanced. So our silver option might be something like, let's do the full $1 million, but we'll do enhanced protection. I've got the lifetime enhancement here. I just want to make sure I take off my rider. So my term rider here, I'm just going to deselect that rider because I'm doing the full kind of $1 million coverage there. So same sort of process, we'll repeat that. We'll say view spreadsheet, we'll export that to Excel. It's going to give us our warning message and pump it out here. You can see we have a slightly different premium, slightly higher, so it'll be interesting to see how that one kind of compares to that term rider. They may be very, very similar, and that may be where we're sort of targeting that premium zone, but we may want kind of the full-blown paid up additions to show them our gold option. Regardless of if they pick it, or if they have the affordability, we may not know exactly how much they are comfortable depositing into these plans. So again, we can give them these sort of different options that fit into these different categories. So I'm going to say silver, go ahead and save that. While that's working, come back over to our third design. And in this case, the only thing I'm going to do is just change the enhanced protection to paid up additions. We're going to see that premium go up considerably. And again, we're just going to simply repeat view spreadsheet, export that to Excel, and basically select everything, copy it, come back to LDA, and paste it in there. Again, upload that. Perfect. And again, finally, I'm just going to add this one as gold here. So I'll save that. All right, so just like before, I'm going to go down, and remember, you don't always have to check off these. I keep taking up my mission statement and sort of culling down some of these reports. Most of them I keep on there just because I do a lot of demos, so I like to show a lot of different report components. Those are all customizable in the account settings as well. So again, let's take out some of these IRR ones. End at the presentation summary. Yeah, it could be a corporate case, we could leave it in there, but I'll just kind of keep these off to just simplify it. Go ahead, generate a report, and let's take a look again how 3 different whole life options, obviously with different product designs, can fall into the same concept of asymmetrical dominance, the decoy effects, the Goldie-lox effects, essentially just giving our customers choice, but not overwhelming them, having the choices be obvious to highlight a natural fit within their kind of goals. Again, all 3 have $1 million coverage. All 3 have slightly different premiums. You can see, obviously, price in this case is supremely dominating the other 2. These 2 are pretty close, so it'd be kind of interesting to see how these, kind of pan out in terms of values. Again, we can see kind of our 3 options are bronze being the least expensive, and that's probably what makes it attractive. So that's one area where it dominates these other 2. However, when we look at things like cash values, it's going to be dominated by the other values. So silver is going to have a little bit more cash value. I think that the big difference will be the overlays between bronze and silver. Gold, obviously, a lot more value, and that's visually represented. You can see in the size of these charts. We keep the scale the same to give that impact of if you're going from one to the other. You can visually see the changes in scale. So I can visually see this is the biggest. I can actually see this one, our silver option, has more cash value than our bronze. And we can go down and make a decision. Again, we can see bronze option has that rider in there. We get up to 1.3 million. Drops down a little below, so it does drop down to 847, a little shy of that $1 million need. But because of those, sort of basically after that 20 years term rider falls off, we still have that enhanced coverage growing in there. So again, we do increase over $1 million of coverage after year 26 there, you can see. Silver, same sort of thing. Silver option, again, we can see it start taking off here at year 20. And our gold, we're growing all the way along. So what I really wanted to see was some of these cash overlays. We know that the gold option is going to be better. What's going to be interesting is if our silver option, that enhanced protection versus the term rider was better in terms of kind of premium versus cash. So really more of an IRR conversation, I think, for that for the most part, but does give different options on there. Again, nice breakdown. I'm actually, just because I'm curious, I'm going to go back, I'm going to add an IRR of cash value, an IRR of insurance benefit. So I'm just going to go with the chart insurance benefit and the chart of cash value. And I'll go ahead and regenerate that. And IRR is really good because it will take into account the difference in those deposits over time as well. So I find it's a very great equalizer, kind of what value makes net present value zero. And it's really good at isolating the most efficient option, regardless of things like different deposits and different times. I'm going to get rid of the gold option. You can see very, very similar in terms of IRR. We can actually see, the silver is a little bit more effective than the term rider. So using that enhanced protection, if we go to, kind of the IRR marginally, but those are very, very close scenarios. So again, good options for your clients because they both perform similarly, and then the client has the option of choosing, is it better to have higher early coverage that drops off in the later years and has a lower premium, which may be more palatable. And actually in this case, again, it may be the bronze option it's kind of asymmetrically dominated. So, depending on how you name those might kind of influence them as well. But we can see it's a really attractive option where we've designed the eco option to be competitive in price and deliver slightly more value. Again, it may come down to cash flow and identify that this is the best option. But by having these kind of different comparison options, we're more likely to position our clients into the right kind of product because they have some choice over what that deposit might look like. Now, final example I want to give here, I do want to show the other way that we can use it. So I'll just pull up Mr. Decoy again here, and I'll hit continue. And actually, one of the other things I could do here, I'm going to delete this case for a second here. I'll just pull up the client file. One of the things, just because I've gone through all the work of setting up, sort of this case here, this bronze, silver, gold, we can actually duplicate this. So, if I know I'm sort of setting up the same framework, I might use different products in these placeholders, but I want to use kind of the framework of the case that I've set up, everything from those report controls and things like that. I can actually duplicate this case as well. You'll notice that right now it's 317129. When I duplicate the case, basically what it's doing is creating a copy of the case, and you can see it's brand new here. Again, if we just test on that client file and go to Mr. Decoy, you're going to see we have a copy of that latest case so that now we can make some modifications to it. And in my case, it's just because I'm going to make 3 different funding options using the same kind of company. And basically to do that, all I have to do to re-upload or update the numbers that are in there is simply click this and repaste or import that spreadsheet file. So in this case, what I'm going to do is I'm going to come back over to our illustration software, get rid of our old sheet. And our first plan, we're going to do all paid up editions. We're going to do all 20 pays, but instead we're going to solve for a premium here. So we're going to say total premium plus EDO. Let's start off and say that this is, let's say it's going to be, let's go with 25. Well, actually, let's do 50,000 to start. So we're going to say $50,000 a year for 20 years is going to be kind of our bronze option here. And this would be obviously more of a mass affluent kind of market. This is high net worth. This is a corporate asset transfer strategy would be great for this. But in trying to find that deposit, again, this is where we're going to use this kind of bronze, silver, gold. And we're going to set up 3 different examples, 50, 75, 100. So let's take a look at what that looks like. We've got our $50,000 quote. We're going to copy it. We're going to bring it back. And as I said, this is going to be our bronze option. So what we're going to do is just paste that over top. We're going to overwrite that data. So while that's uploading, let's get a jump start on the next one. We're going to go back here. The only thing I'm really going to change is I'm going to say that this is going to be a $75,000 deposit. Say OK. Everything else remains the same. We export to Excel. And you can see it's made it 74,999,999. That's OK with me. Select everything, copy it, come back to LDA. This is going to be our silver option. So again, I drop down the silver menu. I say I want to overwrite that data, paste it in there, hit upload. While that's uploading, let's go back to Excel here, close that out. And our final option here is going to be solve for $100,000. Again, product design does make a difference, right? Because you know, we could certainly mix in some ADO to make these different options work and kind of increase that. But you know, for the basic concept of just focusing on deposit, again, great way to do it. I'll export it to Excel. Now we've got kind of our $100,000 deposit, and this is going to be our gold option. Again, copy that, come back to LDA. And you can see I'm just going to overwrite that data by dropping it down, pasting it on top, and saying upload. Okay, so we've got, you know, again, we've cloned our case. It's a completely new case. We've overwritten that data so we can see our bronze here is 50, our silver here is 75, and our gold here is roughly $100,000. Same sort of thing, again, different funding options, maybe give that a case title, funding options, but at the end of the day, we can go ahead and generate a report. And we can compare these different ones. Now, usually when I'm doing multiple whole life ones, you know, some of these charts are good because they visually show these differences. Although, you know, we somewhat get that sum of premiums, you know, is going to be a ratio of each other because we've controlled the deposit. So again, the summing of the total premiums may not be a relevant chart. You may want to just uncheck that one. Total cash value, as you'd expect, keeps growing. So you may actually even uncheck the individual cash value charts. Instead, focus on sort of those overlays. Again, just showing, you know, sort of our three different funding levels, how that plays out. The other interesting thing I think about this is, you know, just sort of the IRRs of the different ones. They're very close, but, you know, not all the time are they identical. So sometimes as you get up there in banding and things like that, you will get, you know, sort of jumps and things like that. At this level where we're putting this much money in, we're going to see very, very similar IRR. It's just a matter of, you know, what do we want to put in there and what do the cash values look like? You know, so this is what you get for $50,000 a year for 20 years. This is what you get for $75,000. This is what you get for $100,000. So a great way to summarize three sort of funding options. You pick the one that looks the best to you, you know, given the values and where you're comfortable and sort of what you're targeting for growth. But another great way that you can kind of use that asymmetrical dominance to help clients find that right deposit level. And again, it doesn't have to be, as I say, $100,000. This works within really any sort of product set. It's really just highlighting those differences where, again, the obvious example becomes apparent. And that's really the whole concept of that Goldie-lox effect. Now, while I've done this all with life coverages, this is something that can be done with really any sort of product out there. So even if doing critical illness comparisons, you know, you may have that same T10 level to 75, level to 75 with ROPD to create that asymmetrical dominance, those three options. You can do this with more options as well. You know, I'd certainly say 4 or 5 plans in a particular report starts to get a little bit overwhelming. And, you know, there's kind of a great study out there where we talk about choice in the insurance industry. And it was a study by Sheena Liger and Mike Lepper, and they basically studied the buying patterns of jam. What they did is they went to an upscale shopping market and gave out coupons for $1 off. One week they tested a display with 24 varieties of jam. Another week they only put out 6. And you would think, you know, with 24 options of jam, obviously we'd appeal to more people, so there'll be more sales and more people using that $1 off coupon. Well, actually the lateral was true, and when they did only 6 varieties, they attracted a lot more interest. And basically what they saw that with the large display, people were only 1/10 as likely to buy as the small display. And really what it was all around was opportunity cost. When we got to something with too many options and we overloaded them, 3 is nice and concise, 4 is okay. When we start getting 5 or 6, it's sort of like if you've ever been to a restaurant with a hugely extensive menu. You're almost worried about picking the wrong option, and so it takes you a lot longer to settle on something. Whereas sometimes you'll go to a restaurant with only 6 items and immediately it becomes very easy to pick the one you want. So remember, framing of your case is very important, and there's a lot of things that you can do in LDA that make it that much easier to present to your clients, especially if you're doing this over Zoom. Again, working with traditional illustrations to try and compare and contrast product becomes extremely difficult. So do yourself a favor and set up some of these different examples in LDA and present them visually, and ideally that hopefully makes your clients a little bit more informed and translates into more sales for yourselves. But that brings us to the end of the webinar, so I just want to thank everyone for joining. I hope you're enjoying your summer, and looking forward to the kind of the busy tail end of the season. Lots of exciting features coming out here at Life Design Analysis, so I look forward to seeing you next month. Take care.